So creative destruction is a term that's popularized by an Austrian economist named Joseph Schumpeter in the 1940s. He considered it to be the central factor of capitalism. So he was more concerned with the unending innovation, these constant change in processes and technologies and industry structures, and the effect that this had on wealth creation and destruction and the continuous cycle of this. We are undoubtedly in the era of a new, smarter consumer. We've got more information, more connectivity than ever before. As a result, I think the traditional consumer-producer model is changing, and the power is now shifting to the consumer. We have a lot more choice than ever before. We have a lot more information about ever before about what we want, what price we want it, and how quickly we want it. This has resulted in a big race to the bottom in pricing of large companies such as Amazon, who are able to use their scale and their infrastructure to deliver us what we want whenever we want, basically. And this is essentially allowing consumers to capture as much consumer surplus as we have at any point in history. The second implication of this is that through labor and capital sharing platforms, we are now able to supplement our incomes and boost our earnings through sweating our assets, be it sharing our homes, our cars, even our pets. Now, this has a dual effect. Through those capital sharing platforms, we are able to earn more money, hopefully spend more money, and kind of stimulate the economy. However, through the labor sharing platforms, we are seeing a lot of pressure on, especially on the lower end of the skill spectrum, on wages and also conditions, labor conditions in these industries, as 0-hour contracts and all of these effects are definitely partly attributable to the increase in technology and globalization. I think the implications of these technological shifts are hard to fully understand at this moment in time. Undoubtedly, there is a lot of deflationary pressure coming through increased globalization and these technologies which are allowing firms and the workforce to connect on many different levels and through many different avenues. I think this is partly to explain for the increase in anti-globalization sentiment that we've been seeing in the past few months, especially through the Brexit vote, through Donald Trump in the US, and through a number of different other flare-ups, I guess, in sentiment that we've been seeing across the world. A lot of analysts and strategists are looking at the future in terms of 3 or 4 decades from now, looking at advances in AI and robotics and automated cars, all of these things which are threatening a number of different jobs in a number of different industries. Oxford University have predicted about 50% of jobs in the US are at risk through these increased technologies. The OECD puts out a bit more a modest figure of about 10%, but there is definite threats and change coming. In our eyes, though, we don't want to speculate on the future, if and when it will come. We'd prefer to look at the technologies that are the technological shifts that are happening before us right now. We have identified a lot of these are deflationary, but we have also identified that consumers are enjoying more consumer power and consumer surplus than ever before. Whether these increases in consumer surplus will result in increased spending by consumers and thus increased growth and increased inflation is up for debate. Consumers may choose instead to continue deleveraging, to continue paying down their debts, and as a result consigning us to a world of low growth and low inflation, such as the Japanese experience for the next couple of decades.